whatever I want to be doing, I want to make sure that we are with the market flow. Now let's see what the market is doing in the currently in the price action. We want to make sure that we are staying with the flow of the market. You always hear folks tell you that stay with the trend because the trend is your friend. Now let me give you a scenario. Let's take for an example. You are moving on the way you're driving, and all of a sudden you hear the convoy, like you heard the sound of a siren, and all of a sudden you realize that it was the governor of the state. So what would you do? You were going to be shifting to one side and allow them to pass. And immediately they finish passing, you drive behind the last vehicle that is moving. You're going to be having an access way where you'll be able to get to your destination on time because why? You followed the flow. And what was the flow? The flow was the convoy. Okay, those guys are the one that are in charge of government, so if you're following them, you're going to be an advantage. Now let's relate that to trading. You don't want to be at the other side of the market whereby the market is bullish and you look for sales opportunity. You're going to be losing out money. Okay, the one of the highest advantage of every trader is to be able to identify if the market is bullish or if it is bearish. Now in this market, I'm going to be showing you how to identify chart patterns. Chart patterns are actually zones that whereby the market tells us that we should wait, we are going to actually continue, but at this time the buyers are actually taking a rest or the sellers are actually taking a rest. All what we want to be doing is wait for what an identity. I'm going to be showing you what to identify to show if the market is actually on the continuation chart pattern or if the market want to reverse. Okay, just stick with me to the end of this video. I'm going to be showing you in this chart here, and also I will take you right into the market to show you how this thing play out. If you're this is the first time for you subscribing, don't forget to do so. Subscribe to this channel and also leave a like. Okay, leave a comment if you want to join our community. Also let us know. So let's just dive right in. Okay, now what market is doing is this market flow is actually bearish. Okay, it's actually bearish. Price has actually been respecting the zones here. Now when we got to here, price came back up, came back down, came back up. Now this whole move here that you're seeing here, I'm going to be telling you the secret behind this whole move. Now the reason why the market came back here and went back up, it's for some persons that are early sellers that want to be entering here thinking this is a resistance zone. Don't forget, support breakout to resistance, so they want to start selling down here. Now when the market came back here, some folks are like, oh no, this is a support zone, I think we should buy. So what we're going to be doing is we're going to be buying up. Guess what? When the market came here, other folks be like, mostly the guys that placed an entry here before, they think this is a good zone. So this is a strong resistance zone. So they're going to be looking for opportunities to please more opportunity to sell back down. Now, when the market came here, don't forget also buyers are equally here. So what they're going to be doing is they're going to be looking for opportunity to what? To buy. Now, what happened? We saw the market come back down and stopped out these guys, took out the money that was here. All the guys they were selling here, the money was taken out. Now, someone will be asking the question, why did the market not go up? I'll tell you why. The reason is because investors and the big players, they are selling. The market flow is sell. So going here to buy is actually wrong. So when you buy, you're going to be losing out money. You're going to be losing out what money. Now, why do I say you're going to be losing out money? It's because you are trying to, as a retail trader, what you want to be doing is trading with the big banks. You can't beat them in this game. They have the bigger liquidity in the market, so they control the market. So your own is just to what? Follow what they're doing. Okay, that's where you get your money from. That's where you become profitable from. Okay, now let's dive right on to another strategy. Now let me say something here. Like I said, I'm going to be showing you how to identify a market chart pattern. Now there's something I do. Take note, this is the last swing point when we got back down. But guess what? Can you observe something? The market did not break below it immediately. So what I want to be doing is in every continuation chart pattern, something happens. The last swing point that took the mark, mostly if it's the bearish, let's use the bearish. You're going to be going back to the bullish. Okay, this is the bearish. The market that came down to the last swing point, that break down to the last swing point. All these folks that were here, they did not break below it. Do you observe that? That's because the market actually, it's a bearish market. So if supposing we had something like this and we got back, we would have said it's going to be a different situation. Let's see what's happening here. It's like this market want to reverse and start going back up, like giving us a head and the shoulder pattern or kind of. But guess what? This is to tell you that you should hold on. This stuff here is to tell you to hold on and wait to see what's happening. And what did we see? We got market break back up, came back down, break back up, came back what? Down. All this is just to tell you that we are going to be still on sales. It's just for us to look for a way to take out money. The market is waiting to see guys that are going to be buying here, so they will continue selling down, take out their money to the downside. That's how brokers make their money. When you lose money from the market, that's how brokers make the money. Okay, now let's continue and let's go over to the bullish scenario. Since I just talked about this one, let's go over to the bullish scenario. Okay, we are bullish here. Now in this case, I said I like to look out for a major swing point. Now this is it. This is the last swing point that took price to the upside. Someone will say, I'll tell you something, the market came back down. Some folks were buying here, they are not right, they are with the trend. Some folks were selling here, oh, that's wrong. Some folks were buying here, sellers, and someone else that were like, this is a triple top. That was one of my one of my a trade my one of my students sent to us on our community. He said he's staying in a triple top here. I looked at the trade and I was like, triple top? This is triple top? It's not. It's not the triple top, because why? This zone here, I'm suspecting it. Now what did we get? The market came back down and we got a breakout. They didn't take this one because we are bullish. These guys are right. They are actually with the market flow. But I will not advise you to buy here. Okay, it's always risky. This is where I advise you to buy from. After we got in the breakout, this is where the market came from. Now your first signal you should be expecting is market breaking out from here. Market breaking out from this zone. Don't forget, some folks see this as the resistance zone. Some folks see it as a support. Who is going to be right? Those that are following the trend. So what happened? We got a breakout here. This first breakout here is to tell us that we are actually going to be changing our move, or we're going to be continuing our move rather. Sorry, we're going to be continuing our move back to bullish. So we got the retracement move back here. But I'll say something, please. If the market break out of the zone and you don't get a confirmation, it's always risky. If you're not, that's not your strategy for you to enter. Like for me, I'm not always comfortable. I don't mind waiting for you to come back to this zone in the future for me to look for opportunities to buy. That works for me. But if you are too smart enough, you know what you're doing, you want to enter from here, you're fine. If you want to enter from here without a confirmation of coming pullback, you're cool with it. So let's move on. Okay, now these are bullish, bearish bearish flag. Now, if you look clearly, this market was moving on a downtrend. It was moving on a downtrend. So what do we get? Don't forget what I said. Don't forget what I said. I said when the market comes to this last order block, it does not come to break it. It just keep moving in between. Now that was the first one I said. The second thing you will notice is that the candles are always small. The bullish candles are always small. Some of the time the bearish too, but they were focused on the bullish because why? If we want to be buying in the trade and the market is bullish, we want to be looking for big momentum, big candles, so that when the market is going to our target, we are confident because we know that those big candles cannot just reverse just like that. But this one, you begin to see small, tiny candles. I'll show you on the chart, okay? Just stick with me. Also, if you're enjoying this video, you have not subscribed, please just hit the subscribe button there and hit the like also, okay? So that we can do it. That's a way of supporting us, so we know what we're doing, okay? Now, these candles are always small. That's one thing to point out. The first one I said, this order block will not be broken. Even if it is coming, it's going to be tapping into it, then go back up. It will not break it like this. If it breaks it, that means something reverse or something else is about to happen, but not definitely not a chart pattern anymore. But the chart pattern, I'm talking about how to identify a chart pattern. This zone here will not be broken. It will come up, come back down, come up, come up, come up, Some folks are selling here, some folks are buying here. I advise folks to wait for a breakout before going back down. Now, don't forget what I said. Can you look clearly very well? I think in this chart, the big candles of which the bearish candles are actually big. Why is it big? Because we are actually with the trend. Okay, you don't want to go and be looking for small candles here to buy. Why are you buying here? Buying here means trading against the trend. Okay, and don't forget, how can you be buying in the zone where the market goes back up, comes back down to this same point where you actually, there's no big move here. We should be looking for something like this. Some, sorry, this thing is not allowing me to draw what I want to draw. We should be looking for big candles like this if we are going up. Okay, at least we are confident enough that this market will not just, except there's a news impact, for it to come back down like this. Okay, but if we're looking for stuff like that, it's cool. Rather than looking for moves like this, oh, it's actually no liquidity. Okay, now let me tell you a secret. The time you will see big momentum candles are in trading sections like the Euros trading section, and also the uh New York trading section. Now when you come in the midnight to open your chart, it's a secret. You can just do an experiment to find out. You will notice something. You'll notice something, that the market is actually the momentum of the candles are actually small. Why are they small? It's because the big banks are not in the chart at that moment. They only place their trade in sections. Okay, now at that time when you see those small candles, it's because the momentum of those candles are very small. It's because the big players are not there. So the time you're going to be making money is in trading sections. So I advise folks to trade with the section and trade with news. Now, like I said, this is the bullish chart pattern. This is the bearish. Now let me open your eyes to a secret. Let me take this out first. Let me look for a clear space. Clear space. Okay. Okay, let's just deal with this space. Let's just deal with this space. Now, let me say something. When the market is actually bullish, so okay, let's use this one as an example. When the market is bearish, you will see candles trying to go up. Don't forget, we are bearish, so let's stay bearish. If the higher time frame, which is the daily, and the 4 hours is bearish, the lower time frame might be showing you bullish, but you have to stay confident to look for sales opportunities. Okay, so you shouldn't be looking for buy opportunities in a lower time frame. It's always risky, no matter how big the candles are. They are just doing that to trick you out. Look at the higher time frame and see the bearish move. Now what I want to say is this: you will notice that when the market is coming down, you will be seeing some candles as if they are going up. This one is to trick you so that you buy. Now why are they tricking you so that you buy? It's because you are seeing the candles as if they are going up, but they are not really going up that much. If you look closely very well, there's no high momentum here. There is no stuff that is very high. Okay, I think let me just shift it up. I'll show you in the chart so that you get a clear picture of what I'm saying. But what I'm trying to say is simple. You don't buy in a bearish market and you don't sell in a bullish market, except you're doing the counter trade. Okay, all you want to do is want to stick with the trend and stick. That's where your profit come out from. Now this is what I wanted to say here. This zone here, this market came back here. Now what I want to be doing is marking out this and check out. This whole thing was confusing for some folks. Buy sell, buy sell. The best thing to do is to wait and see what's happening. So what did we see here? You got some folks, guys, buying here, some folks selling. Don't forget, as the market has not broken above these, I'm not going to be doing anything. What will happen is that this market will break out from this zone here, pull back here to this trend line and start going back up. That is what we anticipate to happen in the market. But for me to come here and say I want to buy, that's risky. Or for me to say I want to sell, I wouldn't do that. Why would I go and sell in the market where the market chart part, the pattern is not actually clear? I wouldn't be doing that. Now you need to take this. When the market is actually bullish, it's going to give you a false move. like we are coming down. And when the market is actually bearish, it's going to give you a false move like we are going up. First move that we are going up. Now let me say this again. When the market is going up, it's going to give you a first move like we are coming down for you to sell. If the market is actually bearish, it's going to give you a first move going up like we are going up. But that's just to trick you out. Now when the market is actually bearish, like if it is bullish, for example, this is for bulls example, and we are coming down, we're going to be thinking of that as a descending channel. Okay. Now for this, when the market is bearish and it's as if we are going up, it's called an ascending channel. But all what you need to know is that we are actually what? Bearish. So we want to stay bearish. Now it's only for rare occasions where you see the market going up, like stuff like this, like we are up and we are really going up. It's still cool, but it's always risky trading this kind of a stuff. Like I said, I always like mapping out the last stuff so that I'll know that I'm with what the flow of the market. The last high, don't forget guys, the last high that came up, and for the bearish, the last low that came down. So that's the folks that's where we put our interest in. Once this zone is broken, we are cool. It's going to be coming back to it. Stay tuned, wait, it will come back. That's where you get to see the chart pattern. Okay, let me explain it like this. That's where you get to see the chart pattern. Okay, someone was asking me a question. How do I actually know that this thing is it? This one is this one. This one is very simple. Whenever you see stuff like this go up, what should you do? Just mark, and you see some funny move like this, and you don't understand what's going on. Hey, this is what I do. Just mark out this zone and keep watching what's happening. You will see the market come to touch that zone, come back, and after some time, the picture will become clear. That is where you carry your trend line from this particular zone down, and you go to the last one that was formed, the first one that was formed, and you draw it down. Then you begin to see what the market was actually doing. I'll say this again. When the market is bullish, the first thing is to wait and see all this stuff that is coming out. When you see it happening, you shouldn't enter. This is what you should do. We are bullish, okay? Just be disciplined enough to wait. Map out the zone that started the move to the downside. This is your structural level. Wait. This is the structural level. Wait. Now, when you are waiting, you'll be seeing some funny moves. And all of a sudden, when you see a move come above this zone, the picture becomes clear. That is where you see what the market was doing. You will never see what the market is doing this rubbish. Okay, mostly if you're a beginner. Like for me, I can actually understand what is happening. I will just predict that it's one of the chart patterns, so I'll just relax and wait. So what I will do is wait for the breakout and the confirmation, and then we start going back up. Now for the bearish scenario, where the market is coming down, this stuff, okay, coming down, this last zone here is a structural level. Now what should we be doing? We should be waiting to see. Now you see price doing this stuff here, you don't have any business with it. Your zone is just your own duty is to wait. Two zones you check. One, the last one that led to the last move down. Two, the one that led to the move up. Good. I have two zones. 1, 2. Now let's look for the bullish. 1, 2. So what are we going to be doing? That is where the market is going to be respecting from. I will show you on the chart. Okay, just stick with me. This is it. So whenever you see this, that was like, oh, finally the picture is now clear. You will never understand the rubbish the market is doing except you understand these two zones here. Once you understand it, that is your major zone, because the market will come back to them before going back down, because this is the structural level. Okay, so that's it. I hope this is not complex. I'm trying to make this video as simple as possible. In case you have any complication, just send a comment in the box below, so give attention to it. Okay, now let's talk about reversal chart patterns, since we understand what chart patterns are. Reversal chart patterns are actually patterns that shows us that the market was bearish, but we want to turn bullish. We were bearish, but want to reverse bullish. Now it's not just going to happen like that, like magic. Now it's going to be giving us confirmations. Now what do we see? First, rejection. Now remember what I showed you about
whenever I see the market come here and I see this last zone, there's something I want to do. I want to be waiting to see what's happening. See a move here, you see another move back down. This tells me something. It's a message to me. Okay, now, but the message is not that clear. This message shows a double bottom, but it's not that clear. I'll tell you why. Because why? We came back here. Now this becomes resistance, this becomes support. Now there's every possibility that this market might break out here and start coming back down. I don't know, but I need confirmations before entering. And what are my confirmations? I'm going to be discussing with you. Okay, the market came back down again. Okay, this tells me that this is another one. Then we got another move here, up again, making it three major points. So what should we do? How do I know that this is the time for me to get involved? I'm confused. I will tell you. It's very simple. It's very simple. Now, how did we know? Check very well. We were bearish, right? And we have 1, 2, 3 major points. And this last one that came did not break below. Let's not talk about this last one for now. So what should we be doing? This is the resistance, this is the support below. Now, this should tell us that this market is tired of being bearish. It wants to turn bullish. How did I know? If you check here, they will see a break of structure here. This is another block, but there was no candle there, but I know it's another block because price has been going to that zone to respect it. So we got to move back down, and then we should be expecting a buy. There was no breakout, but I can enter from here. If you are that kind of a risky guy, that risk taker that wants to take that kind of a trade, it's cool. You can enter from here and take price to the upside. Now that's that for this double and triple bottom. So let's talk about another one. Double bottom. Now in this double bottom, I'm going to be pointing you out to something that I noticed. Boom, resistance, back here, back here. Now I want to show you something. That's what I said. There are 3 things that I look out for. Now, but first of all, I'm going to be explaining. There is something called an order block. An order block is a zone where sellers are selling, buyers are actually putting their pending orders, and stop losses are resting. Okay, so some traders are like, this thing will break out, so they will enter here and put their stop loss here, waiting for the market to come here. We call them breakout traders. So we know that stop losses are resting here, so this becomes an order block. The same thing here and the same thing here. So first I'm buying, or kind of. So I'm going to be talking about this. Look at these zones that are mapped out. If I'm selling in this trade, I'll be selling here, or I'll be selling here, or I'll be selling here, or no, sorry, 1, 2, yeah, right? Then this zone. Now there are 3 things I used to look out for whenever the market want to reverse. Please pay close attention to this video. I'm going to be showing you a secret. Okay, now what are the things that I look out for? Number 1, the first order block. My eyes are always on it. Number 2, the second order block. Very important. And lastly, this one. Good. Let me explain. This thing cannot go lower. Better. Let me take it lower. Where my this last one is, that's my focus. 3. Now, I'm going to be showing you something. Whenever the market move, all this move, this one coming back here is not my business. All this move here, it breaks above this order block. This is my structural level. I know folks will be asking me, this where whenever the market comes to this zone and break above this place, it does not touch it and go back, but it breaks above it. It's called a break of structure. Now a break of structure is the second order block. See it after the first one that made the move come down, it retraces back, come down. This one is my structural level. I'm waiting for it. If anything breaks above it, I know that's the break of structure. So what I'm going to be doing, I'm going to be drawing a line like this. Okay, and this last one. Now this one is break of structure, right? Good. What's the next move? Whenever this break of structure happen, this last line here is going to tell me what the market is going to be changing into. How do I mean? When the market gets here and comes back to this same place where it started from, but did not break below it, that tells me that is a double bottom. This is an indication for it what a market reversal. A market reversal, double bottom. Now I should be looking for aggressive entry here. and put my stop loss below. Now why am I entering? Because price failed to break below this. One, two, I had a break of structure. And whenever there's a break of structure, it's an indication that the market is about to change from bearish to bullish, or from bullish to bearish. Don't forget, two confirmations for me. I had a break of structure. One. Number two, I had a confirmation on my what? My last order block here, that this market did not break below it, so I should be looking for what? Entries to what? To buy to the upside. I don't know if this is clear. Okay, I'm going to be showing you on the chart also. Now those are, I just pointed out two, right? One, a break of structure. Two, I pointed out three other blocks. Now there's another one called trend line break. Good, this line will not give me what I want. Okay, now look very well. This is one of the problem I had as a beginner also. Whenever there's a trend line break, the market will come back to that trend line. How do I mean? Don't forget, this was my first order block that I'm checking. This is the second one, and this last one. Good. Don't forget, market was respecting this one. It respected this one. Now it came back here. It respected this one again. Somebody would have entered here to sell. I don't know why you are selling there. You're your own. But what I'm doing is I'm actually waiting for this last one to see what will happen. And this one, that's my focus. Those two candles. And also this one happens for breakout most times. Now what did we see? The market broke above this trend line. Now we have three indications. Two now. The first one is we had three other blocks. Okay, now the breakout happened as a trend line break. Market was respecting this trend line. All of a sudden it broke out. That's a signal. So we have two. One, other block break of structure, and also a trend line break. Now what's the last one we are expecting? We are expecting this market to come down. Let's see if it will come below this last zone here. Okay, now what happened? It came exactly the same point. It did not break below it. That shows us that the sellers have lost their what? The opportunities of what? Breaking the market to the downside. So we should be looking for opportunity to go what? Up. So up we go. That's why I start looking for opportunity to buy to the upside. Hope this is clear enough. So I'm trying to make this video as simple as possible. Okay, let's talk about the next reversal pattern. Okay, look for another one that's clearer than this. Okay, the same thing happened here. The same thing always happen here. So this is the last one. First, middle, last. Good. Now this one here is the one that led to this move up. Okay, and all of a sudden price came here. This is the last one. So price came back down. What happened? It reversed back here and broke. Break of structure here. Break of structure here. Now what does break of structure mean in reversal? Now all of a sudden we had a move and we got here. Now what happened? Price did not break above it. We have double high, resistance zone, double top, so we're going to be coming down. So, and there's another one here. If you look clearly very well, you see a trend line break. This is not helping me at all. Okay, you see a trend line break here. So let's move. There's something that is very I had a problem with this, so I'm going to be sharing with us how I was able to get rid of this problem. Okay, now the problem is we have some folks coming here to actually sell here, to actually sell, forgetting that the market came back and went back up. Now I'm going to be showing you we have two type of double top. I'm calling it two type of double top because this one is one of it and the next one is this. Don't know if this stuff give me what I want. So this is the next one. This is the last, I think. Okay, this was it, and this was a pattern I actually had a challenge with. This one. Now look very well, you will see that this market is not just form a pattern and start moving. It was doing all form of nonsense, all form of nonsense, all form of nonsense, up to the part that professional traders were buying from here, some were selling from here. This were all form of nonsense. Now, but I'm going to be showing you something. There's a secret I use in identifying this, like the secret that I showed you. This one is a little bit different. So, and the last one, remember, right? Three. You have three. One, two, and three. Now, what happened? This one was broken. We had a break of structure. Now, whenever you see this kind of break of structure, and the market did not come back to this zone again, it just went up and came back here again. It not even come back down here. Now, I should tell you a secret. Remove your attention from this other block. It is not strong. Focus on this one. Why am I saying so? This one was the initial one that I told you about, right? And whenever the market come here, it should come back down here and reverse back up. But take note, whenever the other block is not strong, this one was broken. I did not see what you expected. I will say this: focus on the next one, which is the one that led to the move to the downside. Focus on this one. Let's see what happens. Now, guess what? Price came here. This was when it reversed back to the downside. Now we have our order block has been confirmed. Now we can go back up. Okay, I hope this is clear enough. I hope this is very simple. But take note, whenever you're drawing your trend line in this kind of a zone, it's not going to be working. Trend line is not going to be working here. Or I'll say this. It's not going to be working. So what we want to be doing is focus on the order block. We had three in the previous tutorial that I showed you. Now I said 1, 2, 3, right? This is where we are expecting price to come to before we buy. Now guess what? We had this also, but what did we see? Price came here, broke it, break of structure, right? Nobody will have. It came here. What's this? What's this? What's this? Like, what's this? But what did we see? This is it. Focus on this one. Now we can see our break of structure has happened. Okay, it doesn't mean you are wrong. You are not wrong. They're just trying to trick you into buying so that they will stop you. They're just trying to trick you into buying or selling or become confused at the end of the day. But hey, this is it. I've told you the simplest format on how to stick to this. The simplest format, the simplest. You don't have to stress yourself. Whenever you see this kind of rubbish happening again, I call it rubbish, but it can earn you money. Just focus on this. 1, 2, 3. This one was broken, right? Okay, don't panic. Wait for your confirmation. You didn't see it, just hold on. What did we see? Market came to break this major one, and it came back down quietly without stress. And this your zone has been respected. Don't forget, this might take months. Some of the time, if you're a position trader, if you're trading the lower time frame like 4 hours, or a day trader, this can take days. But you have to stick to it. Now let me tell you a secret in this video. I just feel like sharing it. When it's Mondays are always crazy. Why am I saying so? You should look for a way to put your analysis up on Monday, because whenever it's Monday, the market is actually coming to form. So you are possibly going to be losing out money more on Mondays. Tuesdays is when you should be aligning your strategies and looking for opportunities. Wednesday, Thursday, then Fridays, there's always news release. You should be more careful because there's going to be high volatility and because the market is about to close. Now, let me quickly tell you another thing I've observed during the course of my trading. It's that whenever the market wants to close, let's say you place a trade on Tuesday, whenever it wants to close, there's going to be a more higher volatility where your target might be hit. So what you should be doing is, some of the time your entries are going to be placed on a late your trade are going to be playing out on a late hour or late timing. So your focus is patience, is a virtue. Okay, in this market, if you want to win, you have to be patient. I said two things. Whenever the market wants to close, there's always a higher opportunity for your market to move in your favor. And also the second one is Mondays are always crazy. Okay, so Tuesdays down to Fridays are always news release, so just stick close to your strategy and risk what you can risk and trade. Most of the times my trade play out on Fridays, and some of the time you can equally lose money on Fridays, so just stick to whenever one you believe and stay tuned to your own strategy. So let's continue the video. Okay, if you're liking this video, please give a like and give a thumbs up, or give a subscribe. Just subscribe to our channel also. Okay, I think we're done now, so let's just dive right into the chart and see how this thing plays out.
So this was an ascending channel, so as you can see here, I know we are actually very, so when I saw this stuff here, this will be my focus. This will be my focus. It's because I know we are actually bearish. Sorry. I know we are actually bearish, so this should be my focus. So all this move here is just to trick you into believing that we are bullish. Now take note of what I said before. If we zoom closely, we'll find out that these candles are actually small. Forget these bigger ones that you're seeing there. It's just to encourage you, to let you know that this thing is bullish, you should go up. But if you look very well, you know that this move is actually not really genuine. I'll put it that way. So let's zoom closer. The bullish candles are always very small. See these tiny moves. Tiny moves. They're always small compared to if the market is actually really trending bullish. You can just do an experiment to check when a chart pattern is being formed and when a market is actually moving in the right direction. You will see that the candles are always what? Different. Okay, just stick with me. I don't know why it's being slow. Okay, let's go to the 4 hours. Now we get out. Go to 4 hours. Okay, 4 hours, 4 hours, 4 hours. Okay, guys, we always drop videos on Tuesday. So for those in Nigeria, for 1:45, videos are always live on Tuesday. So looking forward to give a sponsorship on advert. You can let us know. I think this was one of the stuff I was talking about. As you can see, the market is bearish. So after the breakout, the market came back to this trend line. Come on now. Okay. I don't know why this stuff is not giving what I want. Okay, let me just leave it like that. But just notice what I'm trying to say. After the breakout, we got a pullback. Now let me use this stuff to indicate it. Okay, this was it. This is the last one I told you about. So we got a move. As you can see, we've been seeing a clear move up, up, down, up, down, up, down, up, down. From here, the market did not come to that zone. Then all of a sudden, we got a break below it. I think you can now follow what I'm saying. We got a break below it. Now, what did we see? The market will not just fly down to it. It actually came back to it. Can you see? It came back to that trend line. Then before we started dropping. Now, it came back and did the same thing here. It's only odd USD that like doing this rubbish stuff. Let me remove this. I don't know. Let me remove this. Okay, better. So it came and did the same stuff here, going up, and we broke down. Then we came back to the trend line here, and then we dropped. Okay, and then we dropped to the downside. Now, a simple thing to note here is that the market will always come to you. That is the simplest thing you need to note. Now, let's move to reversal chart patterns. Yeah, I think it's euro odd. I'm going to be talking about double bottom and how the reversal happened and what led to it. Okay, we are here on euro odd. Something happened here, and what did we have? We have a reversal pattern. Now I need to watch what I was telling you about that stuff when I said you're going to be seeing some things happen. Okay, they're always presenting themselves. Now some things happen. Now this is it. Now what I'm going to be doing is this. As you can see, this trend line is here. What I'm going to be doing is identify some zones, and those three zones are: one, the one that led to the move to the downside; two, the one that I call my structural level. Don't forget, this was the one that was touching the trend line; and three, did I share this stuff? Okay, I did the head and shoulder pattern. Let me quickly explain something here. There's something that happened here. This last move, I always look at this one here and this one. I don't check this one. Mostly, don't forget, if I see that the market is here, okay, and it comes back to this trend line, don't forget we say this is our last zone. Normally we are supposed to get a double bottom here and start flying upright, but what did we get? We got a break down. I'm talking about how to identify a market reversal pattern, but what did we see? We got a breakdown. Now this should tell us that instead of us to come and be pointing at here because the market has gone down, you're going to be looking at this one. Let me point this. We're going to be looking at this one. Okay, now this one also. So what did happen here? The market came here, and definitely this is a break of structure. Okay, this is a break of structure. What did we see? The market pull back. Now don't forget what I told you. I'm not going to be throwing away this one. The market will come and respect it in the future. This is where I entered the market from. To take it up. Let me explain this. I don't know if you understand clearly what I'm trying to say. What I'm trying to say is we have three other blocks. 1, 2. Now in the reversal, this one is the third one. Don't forget I said 3. This is the third one. But take note of this. This market came here and gave us a double bottom after touching this trend line. We are waiting for a confirmation. It did not happen. What happened? It came back down. Now whenever I see a market come down like this, don't forget our trade signal is trend line break. 1, 2, the other block break of structure. The break of structure has not happened. Okay, and the third one, it's the 3 other blocks that we have. Okay, which one has been confirmed? None of them has been confirmed. Now what happened? The market break to this one. Now this is a break of structure. One of them has been confirmed. We have a break of structure. Now there's something we are expecting, and that thing we are expecting is market coming back to the trend line where it broke, and then we got an entry here to take price to the upside. Now let's talk about a double bottom. Okay, I think I have a reversal chart pattern here. Chart pattern here. Okay, now this is a descending channel. Don't forget the market is bullish. We have broken structure here, and we have confirmed everything that this market is bullish. So what did we see? We saw price coming down. Now who are you trying to trick? We already know that you are actually going up, because this downside move, this structure has been confirmed to be bullish. So you can't tell us that we are going bearish all of a sudden. So what did we see? We got a breakout, and we will move forward to the upside. It's a continuation chart pattern. Okay, let's talk about the last one. Double bottom. I think I should go back to, I should go to 1 hour so that we can just see this. This is the 4 hours. Some folks might not really understand what 4 hours is doing, but let's go to 1 hour to get a clearer picture of what the market is really doing. Okay, 1 hour, 1 hour. Okay, 1 hour should be giving us a better picture. Okay, this is it. Order block. That's order block. You got to pull back here to this double downside. So we had a double bottom here. Double bottom. Let me see if I can zoom this closely so that it to be clearer. Okay, let's have a trend line. Okay, in case you're wondering how to draw a trend line, I think I created a video some time ago. Check some of our videos. There's a link there to understanding what the market to get a trend line is possible. On our chart, it's easy to draw a trend line. There's actually a video created for it. Okay. Okay, give me stuff. I don't know why this stuff is not doing what I want. Okay. Okay, let me see if I can get another one. Okay, this is much more better. Okay, now so we have it. Now we have three major swing points. Don't forget, we have the first one. Let me check this out. Okay, the first one, the second one, and the third one. Now what did we have here? What did we have here? We have a break, a structure here. We got back. They're still on trend line. Don't forget, the market broke out of the trend line here, came back to this trend line again, gave us an entry here for us to take price above. Now if you're looking for a place to target, I will tell you it's very easy. Target the first one that started the move. That's where to put your take profit. See that the market came to it before a retracement back. Okay, that's all for this video. Give a comment section below and just leave a like also. Okay.